Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs and I'll talk about the general trade setup. And most of the Asian markets are shut today, barring Japan, which is trading up almost 1%. The global Qs have been decent. The SGX Nifty is indicating a gap up of almost 42 points, so indicating that we will have a positive start. Most of the ADRs also ended with a positive bias except for two. So leading the ADRs was ICICI Bank and Vedanta, up almost 1.5 to 2% gains that came in. The other ADRs that didn't do well was pretty much Infosys, which was flat in trade. HDFC Bank and Tata Motors were slightly weak in trade yesterday. Now, as far as commodities are concerned, crude was the big winner yesterday. It gained almost over 1% overnight. So in the last 3 to 4 trading session, crude has actually moved up over 4%. So you can see today also the opening trades are positive. So crude again, Brent crude coming close to the $65 barrel per mark, and the WTI close to the $61.50 barrel per mark. As far as commodities are concerned, positive close by most of the commodities on the LME. Except for aluminium, which was trading down in trade, most of the other commodities ended with a positive bias. The big move came in lead, which was up almost 1.5%. China shut today, so no cues coming in from the commodities in China. As far as gold, precious metals is concerned, gold and silver seem to be doing well. They're up almost flattish in trade, but yet with a positive bias. Now, fund flows, FIs used the opportunity to sell. They sold in 240 crores, DIs bought in 50 crores. So on a month-to-date basis, whatever FIs have sold in, DIs have actually managed to buy in this month itself. Now, yesterday the Nifty did well. It was up almost 0.4%, while they were selling in the mid caps and small cap arena. As far as some of the sectors in VIX is concerned, VIX was down 5% since the Nifty was doing well. The sectors in focus, Nifty oil was doing well, while the real estate stocks saw a little bit of selling. Now, overall, the Nifty was up almost 45 points. ICICI, Infosys, HDFC and Vedanta contributed positively. Slight bit of selling happening as far as L&T and India Bulls was concerned. But Agam, what are the FNOQs indicating?
Again, Darshan, we continue to see Nifty consolidate between the mark of 10,500 and 10,600. Not too much has changed there when it comes to the Nifty futures, and it's the same for the Nifty bank futures as well. Very little change in open interest. That said, when it comes to the VIX, it has come off and quite substantially now. It's declined for yet another day by 5%. At around 16.3. In terms of changes in open interest, what we've also seen is, the put-call ratio, that's continues to remain at around the same level at around 1.13. But when it comes to the option strike, we've seen more writing around the 10,500 call. That's where you can see a near-term support. Should we not see the Nifty break below that level in today's day of trade, that level's not too far. But of course, GN irrigation stands out because it's moved into the FNO band, so expected restricted trade there. But we're also keeping an eye on several other counters like Apollo Hospitals, which has seen fresh longs. On the other hand, Punjab National Bank continues to see more weakness with fresh shorts building in. But once again, all eyes will continue to remain on the benchmark indices and where they go as we move into today's day of trade.
Stock of the day is Prakash Industries. Now, the company has issued warrant to its promoter, will be issuing warrants to its promoter to raise a sum of around 234 odd crore. It will issue good 1 crore of warrants to its promoter at a price of 200 each per warrant, which is going to be a convertible one, in order to raise 208 crore. An additional 12.5 lakh of warrants to the shareholders to raise a sum of around 26 odd crore. The company will be using this fund to augment its working capital requirement and also meeting its long-term requirement along with the debt repayment obligation. In terms of shareholding pattern, this development is definitely positive for the company, given that with this the promoter stake in the company will increase. Presently, the promoter holds nearly 41% of stake in the company, while the public shareholding stands at a good 59%. So with this, we can expect the promoter stake to go higher, and this indicates about the growing confidence that the promoter has for the company. Now, remember the fact, like for the last 1 year, we've seen the promoter holding coming down substantially from 46% in December last year to December this year. It's come down to 41%. Also, do remember the fact that Ace investors have picked up stake in the company. You have Jhunjhunwala, who holds 1.6% stake in the company, and also you have Mukul Agarwal, which holds another 1.5% stake in the company. counter. In terms of the financial, it's a pretty picture there. If you look at the sales, we're looking at a good 31% growth year-on-year basis for 9-month ended. EBITDA too has shot up by more than 100%, and profits have grown multifold for this company. In terms of the debt payment, we've seen the company has been substantially been able to reduce its debt, which has come down by a good 160 odd crore for the 9-month ended December 2017. Moreover, it's confident of being a debt-free company by a good next 2 years. With that, let's toss it over to Saloni for rupee and bond market updates.
Thanks for that, Nikki. So starting off with rupee, it extended gains for the third straight session yesterday, and it advanced by nearly 18 paise to end at 63.91 levels against the dollar on the back of sustained selling of the American currency by exporters and banks. The local unit also got a boost from higher domestic equity markets along with weak dollar overseas. Elsewhere domestically, wholesale price inflation aged to 2.84% as compared to an estimate of 3.2%, which also, so this data also supported the rupee's up move. Speaking about the bond market, sovereign bonds declined yesterday the most in nearly 2 weeks as yields on the 10-year security as yields on the 10-year security jumped nearly 8 basis points to 7.57% after RBI said that they're ready to infuse additional liquidity if required. On the global front, dollar index ended lower for the 5th straight session yesterday, and it now hovers near the 3-year lows, 3-year lows of 88.50 levels. The dollar fell further against the yen to hit a fresh 15-month low of 106.02 levels yesterday. Well, speaking of euro and pound, both of these currencies are poised to gain nearly 2% for this week. And lastly, coming back home, dollar rupee is trading flat in the non-deliverable forward market at 63.90 levels, which indicates a flat opening for Indian rupee in today's trade. Having said that, let's shift focus to commodity space. Good morning, Jayesh. Oil prices are heading for a weekly gain. What cues are you picking up there?
That's right, Saloni. In fact, oil prices have continued their rally upwards, and oil posted or surged to its highest level in over a week now, that is overnight. WTI gained more than 1%. However, Brent did not gain that much. Now, this is on the back of some comments that we got from the Saudi energy minister, who said that that OPEC will soon discuss with Russia a new way of calculating the inventory level. So we'll have to wait and watch what really comes out of that. But moving on to the precious metal space, we have seen some stability come about for gold prices near the 1350 level. However, there are some concerns on the US Fed rate hike, the pace at which they are going to hike rates. That needs to be watched now for the precious metal space. Shifting focus to the base metal space, the index itself closed higher for the 4th consecutive session in London, and aluminium was the only metal which dropped in trade. We had LME inventory which surged towards the biggest weekly expansion in 12 years, and that contributed to the downfall of aluminium. Lead was the top performer, gained 1.5%, while copper, zinc and nickel, closed marginally higher. Now, we are not getting any cues from the Shanghai Futures Exchange. That is on account of a holiday that they're celebrating.
Well, amongst the stocks that we're tracking today is IDBI Bank, where they have said that they have sold their 30% stake in NSDLE Governance Infrastructure. The stake sale amount has not been disclosed. The board approval for this had come in earlier in December, but the trade has gone through now. So that's with respect to IDBI Bank. You also have an update on Mahindra & Mahindra, where the company has said they will invest 176 crores in Zoomcar India for about 16% stake. That apart, we're also watching out for Union Bank of India. They've updated their exposure with respect to the PNB fraud case, and they've said that they have an exposure of $300 million. That's close to 1,900 crores, and they've said that they're fully secured and confident of receiving that payment. You also have Allahabad Bank. Now, their exposure is set to be at close to 4,000 crores, and that's according to Bloomberg news reports that came in yesterday. That apart, we're also watching out for 8K Miles. They've launched a proprietary blockchain platform. You have Indoco Remedies. Now, they have said that they've received a European GMP certification for their manufacturing facility in Goa. Some marginal, sentimental positive on the back of this news likely for that counter. Future Consumer, they will raise 200 crores from UK-based CDC Group via non-convertible debentures, that is to fund capex and growth. That apart, we're also looking out for Bhushan Steel. Now, a PTI report has said that Bhushan Steel and Bhushan Power resolution professionals may meet creditors today to evaluate their bids and the resolution plan. So we could see some sort of updates on this one. Keep an eye out for Bhushan Steel. And on the back of bulk deals, we're tracking two names. One is a recently listed Praxis Home Retail, where Akash Bansali's Adi Financial has bought 6.2 lakh shares yesterday. And then you also have City Union Bank, where Lavender Investments has sold nearly 1% stake in a bulk deal yesterday. They held 1.05% stake or so as of 31st December. So it's a near exit for this one, this investor in City Union Bank.
अब क्या बाकी रहा, जो साहब ने किया अभी सब ओपन हो गया, अभी कोई पॉलिसी की जरूरत नहीं। देखिए ऐसा है एक्शंस चाहिए। हमने जैसे स्टार्टअप की किया था, पॉलिसी नहीं बनाई थी, हमने सारे एक्शन प्लान बना दिया। एक्शन प्लान बना के हर मिनिस्ट्री अपना अपना एक्शन कार्रवाई करना शुरू कर दिया और हम लोग ओवरऑल उसको मॉनिटर कर रहे हैं। पॉलिसी की ऐसी कोई ज़रूरत है ही नहीं।
We thought it was a very courageous statement to go fully to 100% by 2030, because even highly developed, and with highly developed I mean not the typical definition but the electricity definition, highly developed electric markets are not taking up such courageous statements.
Right.
For us the concern is simply we need to understand better in form of a policy, what is the government thinking, what are their plans. And with that I mean specifically what are their plans, where the energy will come from.
Right.
Can this energy be cleaner, and it should be cleaner than the existing vehicles, which at the moment it is not.
Right.
You still have challenges with the production of electricity in this market specifically. Then the other issue actually for us is an environmental concern.
Yes.
What happens with the batteries? Where is the concept for recycling?
What are the speed breakers in electric vehicle? I think three, according to me. First is the cost. Cost of battery is high. It is not affordable as of now. Second is range anxiety. People should know how long it can drive, etc. And third is charging infrastructure.
More important than policy is an action plan. I think in India, in most areas, we need action rather than things written on paper, because policy is all paper. So more important, therefore, would be an action plan which is implemented. So I agree with the minister's approach and Amitabh Kant's approach that we should have an action plan and implement that action plan.
5 major developments sort of took place over the course of the day because of what happened with the Punjab National Bank. Earlier, the MD and CEO of Punjab National Bank conducted a press conference where he said that they will be paying out any bona fide commitments to any bank who's involved in the system. Nobody knows what this bona fide commitment actually means, but that is something that will come up later. The second point that came up was that there was a blame game between Punjab National Bank and the other banks involved, where Punjab National Bank claimed that it will not have any liabilities, while the other banks claimed that all liabilities lie on Punjab National Bank and they are supposed to pay them out. The third important development that took place was raids conducted by the Enforcement Directorate. So they raided multiple locations over the course of the day of properties and offices owned by Nirav Modi and some other parties involved in this case, and they found a number of things, a large amount of money, about 5,100 crore worth of gems and jewelry from his office. That is what the Enforcement Directorate has said from its Twitter handle. Apart from that, the next thing that sort of played out was a lookout notice by the Central Bureau of Investigation. You see, over the course of the day, we came to know that Nirav Modi and 3 other people involved in this case, including his wife, his younger brother, as well as Mehul Choksi, have all left the country. They've all moved out to other places. So there is a lookout notice issued by the Central Bureau of Investigations against them. The fifth and the most important point that came out was a blame game between 2 political parties. As we know, Congress has been blaming the BJP for not acting soon enough, while BJP saying that Congress was probably sleeping on the wheel between 2011 and 14 when this whole scam sort of took place. there is a blame game and there is sort of a ball being passed around, wherein Punjab National Bank says that it will only honor bona fide commitments. Now, according to the bank, there are investigations going on. The investigations will reveal the amount of money that Punjab National Bank should be paying these banks. While the banks on their part have been claiming that they gave out this credit to people on the basis of an LOU, letter of undertaking, that was issued by Punjab National Bank. It was a legitimate piece of paper. It was a legitimate message that came from a bank branch. Which is why they gave out the money, and that now the bank is liable as and when the amount matures. As such, what we know from our sources is that banks have already placed requests with the Punjab National Bank to pay them out. At this point in time, Punjab National Bank is saying that we will wait for the investigation to get over.
Some more stocks to watch out for. First up, we have Punjab National Bank. That was down 12% yesterday and saw delivery selling of more than 425 crores. The delivery volume shot up 150% at about 3.25 crore shares as compared to its 5-day average, and the total volume gained more than 3 times at about 19 crore shares as compared to its 5-day average. ICICI Bank, the second stock to watch out for, that was up about 3% and saw delivery buying of more than 400 crores. The delivery volume was up nearly 60% at 1.2 crore shares as compared to its 5-day average, and the total volume shot up nearly 70% at 2.5 crore shares as compared to its 5-day average. PC Jewellers, last and final stock to watch out for, that was down more than 5% but saw delivery value of about 110 crores. The delivery volume was up just 33% at 31 lakh shares as compared to its 5-day average, and the total volume was up more than 110% at about 2.6 crore shares as compared to its 5-day average.
On the big brokerage calls for the day, first we have is Motilal Oswal on Zee Entertainment. Now they have maintained their buy rating on the stock with a target price of 705. Now Zee has launched its digital app Z5, and this launch is a big positive for Zee as it fills one of the key product gaps, placing the company in line with Hotstar and other top original content providers in the OTT space. Now the company will be focusing on original content to benefit from the shift towards the OTT consumption. On the financial side, however, if you see, this app will have an additional operating cost of close to 50 to 70 crore rupees. Of this, 20 to 30 will be the content cost, while the remaining would be marketing, promotion and customer acquisition cost according to the brokerage. Now this will impact the EBITDA margins of Zee Entertainment by close to 80 to 100 basis points according to the brokerage. However, over a longer period of time, Zee's EPS is expected to grow at a CAGR of around 24% over FY 18 to 20, and its return on invested capital is expected to be over 30% according to the brokerage. Second, we have is Credit Suisse on Apollo Hospitals. Now they have upgraded the stock to outperform from neutral and have raised the target price to 1,450 from 1,075. Now they have upgraded the stock for four reasons. Now they're expecting the margins have bottomed out for mature hospitals. The main Chennai hospital has a low utilization of 53%. Now the brokerage is expecting the startup losses at Navi Mumbai hospital to reduce starting from the next quarter, and they are saying that the stent pricing impact will moderate in next year because Apollo has reprices the insurance contract. Lastly, the brokerage is expecting Apollo's EBITDA to grow at a compounded annual growth rate of 20% over FY 18 to 20.
If you want to build a UPI system, you must have an ability to send money to an Aadhaar linked account, an Aadhaar number. You must have an ability to receive money, send money and pay to anybody agnostic of that customer is on your platform or not. And you must have login password, authentication, securities, all sorts of things. All this is totally not there when you look at WhatsApp product. When I looked at WhatsApp product, it is flawless and smooth, except that it is exactly because you're violating every other obligation. We wish we could do that because we were asked not to let this happen. So here it is. What I'm trying to say is Facebook, with its tricks to continue to trick countries, is tricking us again, and it is doing things which are not supposed to be the way they're supposed to be. I mean, the problem here is that Facebook must not do things which it did in internet, access way, in the payments way. It should live by, abide by all the regulation, all the suggestions that are there, all the guidances that are there in the country.
And here's an update for you on the Indian economy. India's trade deficit in January widened the most in over 4.5 years. The deficit, which is the gap between exports and imports, rose as much as 65% from a year ago to $16.3 billion. Exports rose 9%, bolstered by Indian shipments of engineering goods and organic and inorganic chemicals. Petroleum and crude oil imports continued to inflate India's import bill, however, which went up by over 25%. Now, most of the stories that we've spoken about so far are on the website bloombergquint.com, but there are several more that you should know about, and here are a couple of them. A growing number of economists expect the Federal Reserve to step up its pace of its interest rate hikes this year. That's after congressional passage of a $300 billion government spending package that's seen lifting U.S. economic growth and inflation. The Supreme Court on Thursday ordered that financial institutions holding pledged shares of Fortis Healthcare are free to sell them, even as Japan's Daiichi Sankyo is looking to prevent the Singh brothers from selling assets to enforce a 3,500 crore rupee arbitral award. And Edwin Wong, the Chief Investment Officer of Hong Kong headquartered SSG Capital Management, sees a multitude of opportunities in India as the nation pushes ahead with a bankruptcy system overhaul. Well, that's all we have for you and all you need to know. Up next is Indian Open, and that will take you through market opening. Do stay tuned. This is Bloomberg Quint.